Nasdaq 100 did follow through with further upside this week, which we called out in our last video. This was despite a negative start to the week where major indices gapped down on Sunday night. If you have a look at what price did this week, it broke through the resistance area of 14,400 to 14,440 and is now consolidating after a successful backtest of the third breakdown, which is where the trend line in black comes from, connecting the lows from January and the third breakdown here highlighted. This area around 14,765 to 800 is huge because it would negate the third breakdown and the bear flag pattern highlighted. Getting above this area would see price rally quickly towards the 200-day moving average, which is around 15,230. You can see price had two unsuccessful attempts this week to break out. If this area continues to hold, we've just backtested a major area and it would spell trouble for the bulls, confirming the whole move as a counter trend rally with a direct sell towards that 14,400-440 support area. Below that, and it's on to 14,135 to 150. Looking at this chart from Goldman's, they've highlighted some of the violent bounces that occurred in the 2008 bear market with counter trend bounces of up to 19%. So it's worth being wary and cynical about this rally until we see some resilience where price pulls back and comes under severe selling pressure and holds key support levels. So far we haven't really seen that. If price did come off and hold say the 14,135 to 150 level, which coincides with the 20 and 40-day moving averages, this would be a positive and likely confirm a low is in place, including that double bottom around 13k. So to summarize, the upside level to watch is 14,765 to 800. Above that, and it's on to 15,230 being the 200-day moving average. On the downside, support levels are 14,440, 14,135, and 14,065. All eyes should be on that critical area next week, 14,765 to 800, because this back test will determine whether it is just that, a counter trend bounce, or are we reversing course, in which case a double bottom is in and a low is in. Taking a quick look at crude oil, which has remained volatile this week. In my last video, I mentioned price would be at a minimum retesting that 106.20 to 40 level, which it did, and that if price got above this area, we would head towards 111, followed by 115. We got both of those targets this week, with the high coming in around 116.30. Although price has cooled off, there could be some upside potential short term, potentially retesting that 115.20 area again. But the key level I'd be watching is the 106.20 to 40 level. Price will come back to retest that, and if that does not hold, the selling will accelerate. The risk remains to the downside in oil, so I wouldn't go chasing this one to the upside. Downside levels to watch, 106.20 to 40. Following that, 101.70. Before I finish up, a currency pair that caught my eye this week has been the dollar yen, which has surged. Price broke above the 120.70 to 120 level, touching a high of 122.44. The surge in the dollar yen has been driven by treasury yields as Fed officials continue to talk up rate hikes. Just have a look at this chart between the 10-year yield and the dollar yen. It says it all really. The movement is in sync. One thing I would call out here is the market has priced Fed fund rates to be at 2.5%, which the 10-year hit this week. So the rate hikes are priced in, including a 50 basis point move in the next meeting. This again leaves little room for upside, so I wouldn't chase this one either. The dollar yen is likely to come off next week, giving back some of the gains from this week. A retest of that 120.70 to 121 level is highly likely. As always, if you'd like to learn more about technical analysis and how I come up with the levels along with my trade plans, come and join the trading community at Level Traders, where you'll get access to the live trading chat room and my daily blog. With that said, if you're getting value out of these videos, remember to hit that subscribe button so you don't miss future content, and I'll see you at the next one.